It's all yours, Carmen.
Cool. Hey, everybody. So I'm going to go ahead and get started. Um, what I'm going to do for you guys tonight is put together a lot of the concepts that were in the movie that we watched Monday, and then also give you just some visuals of how to interpret some of the things that you saw. So if you did not see the video on Monday, if you were on Monday's Zoom call, if you're brand new, I encourage you to go back and look at Monday's Zoom call. The link is in the group and it's on YouTube because that video is like 30 minutes long, but it's going to be the foundation of everything that we talk about for literally the rest of the year and everything that you'll need to know from a fundamental standpoint going forward. So that's going to be your basis fundamentally. So what I have on my chart right now is just US 30. And I picked US 30 just because I knew there was an example of what I wanted to show you on this chart, in addition to a couple of things on the Forex Factory calendar. So I'm going to be bouncing back and forth as I go through and kind of sum up and talk about some things in the video. So to start out the video, um, we learned about the driving forces of the economy. I'm not going to cover that. The one thing that I do want to hit on is transactions. So when the market closes, anytime the market pauses, so even though you don't see the market moving, the market's still moving, because one thing you have to remember is that the government is one of the largest buyers and spenders, buyers and sellers in the marketplace. The government never closes. The government is always open. The government is always working, even though there might be little parts of the government that might be closed. Um, it's always working, even with the banking system. Even though you can't go into the bank right now and make a transactions, technically the banking system is still working because there are banks on the other side of the world transacting in US dollars, and we still have to accommodate that need. So I want you to remember that. And one of the examples I wanted to show you of that in the marketplace is right here. So anytime we're talking about gaps, so if you hear me or Mr. Levels talking about a gap that occurs in the market, this is what we're talking about. So it's an area between two candlesticks where there's nothing. Literally, there will be a white space, or whatever color your background is, it will be blank. Um, but the gap is right there. So what happens there is government spending. So this is US 30. So this is showing where there were transactions made when the market closed or the market took a pause that were not accounted for in the charts. So let's say on a Friday afternoon, there's earnings reports. So for those of you who are trading stocks, this is going to be super important. So please pay attention. If you trade stocks, and especially on a Friday, if a stock that you trade has earnings coming out, what they call after the bell, that means that the earnings numbers aren't going to come out until after the market closes. So a really good example of that was Netflix. Netflix had earnings that came out yesterday after the bell. And Netflix, their stock went up $56 after the bell. And then if you look at their stock price today, it says that their stock price is up like $86. That whole $86 didn't just happen today. $56 of it happened after the market closed, when you can't actually trade. Depending on the type of account and the broker you have and the money you have in that account, there are certain levels of accounts that can trade up until like the cutoff point of either 7 or 9 p.m. So if you're not in that group of people, then your cutoff time was 4 yesterday. And then you wouldn't have been able to trade again until 9:30. Well, the market opens technically at like 1 o'clock in the morning for bankers to start trading stocks. But most of them don't start trading in the pre-market until between 5 and 7 o'clock in the morning. So there's about 4 to 6 hours of time where other people can trade and you can't. And it's not going to actually show up in the chart until the market's open. So that's where these gaps come from. And when we're not looking at US 30, which deals with stocks, if you look at gold, if you're looking at the dollar, if you're looking at silver, or a currency pair, that's government spending. So any government spending that happens over the weekend happens during the pause. The pause is for mostly gold, silver, US 30. They take a pause at like 4:15 to 4:30, and then we'll take another pause again at 5 o'clock and won't reopen again until 6. That's because a lot of those things deal with banking. A lot of those things deal with trying to rebalance the books, and technically 6 o'clock starts a new trading day for those things. So you will see gaps when they take a pause and then over the weekend. That's because books are being rebalanced and spending occurs over the weekend when you don't see the markets moving on your chart. So these gaps occur during that time. So when you're looking at that video and it's talking about government spending, government transactions, and you're thinking, well, how can I get a good visualization of what government spending looks like? It's those gaps in the chart. Also in the video, a really good example, because we had something come out about it today, is interest rates. So not going to go through all the details of the video, but we're at a point in time right now in the world, not just our economy here in the US, but global economies. When we say global economies, we mean all of the economies across the world, because we are all interconnected. It's like a huge puzzle. If one economy goes down, all the economies are going to go down because we're that interlocked. So in the global economy right now, most countries have very low interest rates. Like the interest rates right now are like rock bottom low for most countries. So what that means is, all these governments are trying to stimulate the economy, because remember in the video, it says lowering interest rates stimulates the economy. You're trying to drive spending because borrowing money typically goes up because it's cheaper to do so when interest rates are low. So with Canada, they didn't change their overnight rate. I'm not going to go into what an overnight rate is on this call. I might do that on next Wednesday's call, go through what the different types of interest rates are and what they mean. But just know that it's what happens in banking when you don't see the charts moving. So it's what happens overnight, as the name kind of hints to right there. But they didn't change this rate. One of the reasons why they didn't change this rate is because how to read and interpret this number is not just 0.25%. It's what they call 25 basis points. So anytime you see an interest rate, you can read it two ways. You can say 0.25%, or you can say 25 basis points. It means the exact same thing. And you will hear them on the news. You'll hear the Fed. You'll read it both ways. So I want you to know what both of those mean. They mean the same thing. You'll see the interest rate quoted those ways. So the other thing I wanted to say is it's not just 0.25%, it's 0 to 0.25%, because whenever you're looking at the interest rate, it's never a fixed interest rate. It's always a range for interest rates. That interest rate goes for not only the overnight rate, but any of the interest rates that we're talking about. So it's always a range, and it's always to the number that would be below never above, because if it was 0.5% or 50 basis points, 50 basis points is there. So it's always going to quote or give you the higher end of that interest rate range here. And then zero would be on the other end. So why they didn't change it is because you're already quoting 0 to 0.25%. You want a lot of these countries are trying to give themselves a cushion. So this is like that thin cushion that you have that separates you from the floor if you're without a bed. Like having a bed would be us having that 2.25% interest rate that we had last year and the year before. Now we're sleeping on a really thin mattress. Even though this is Canada, this is our interest rate too here in the US. It's a really thin mattress that you're sleeping on and it's separating you from the floor. You have to give yourself room just in case the economy doesn't recover the way that you want it to. Because if you went straight to 0%, you have nothing left. You have no cushion left. And then if your economy doesn't stimulate the way you want it to, then you have to go to negative interest rates, and no major economy wants to be in negative interest rate status, except for Europe. They had no choice. And so when we start talking about safe havens, I'll talk a lot more about negative interest rates because that's a benefit of a safe haven. But it only works in certain conditions. So we'll talk about that because safe havens are places where you put your money when you feel that the dollar is not working for you or your currency isn't working for you. So that's something that we'll definitely be talking about really soon to get you guys thinking about that. As far as other news that happened today, so the inauguration was today. President Biden officially has all the nuclear codes. The codes. So Trump left before Biden was sworn in. So he had the nuclear codes with him because the president has to always have them at all times. So a staff aide had to give Biden a new nuclear football, as they call it, a new set of codes, and then like everything that Trump had was deactivated. I'm like, that's just so crazy. But that hasn't happened in quite a few years, quite a few transitions of presidency. So it was just kind of interesting to see how they work that out. But in addition to transitioning nuclear powers or the nuclear controls, Biden was pretty busy today. Him and Kamala both were pretty busy today. She swore in new members of Congress, and then Biden also executed 15 executive orders today. I was going to make you guys tell me how many executive orders he actually signed today, but I'm just going to be nice. I'll tell you that it's 15, and I'm going to tell you what they all are, because at some point in time, depending on how I feel once I read them all, we'll talk about how to go about planning the year based off of these. All right, so it's 15 of them. The first one, mask mandate requiring face coverings in federal buildings and land. The second one is to halt the border wall construction by terminating the national emergency declaration used to fund it. The third one is the end of the Muslim travel ban from 7 countries. The fourth is the reversal of Trump's expansion of immigration enforcement. The fifth is to stop the US from withdrawing from the World Health Organization. The sixth is to rejoin the Paris Climate Accord to reduce fossil fuel emissions. So with that one, he signed it, but it's going to take 30 days for it to actually go into effect. So he had to literally do that on day 1 to get the ball rolling with the Paris Climate Accord. Number 7 is to reinstate a requirement for non-citizens to be included in the census. 8 is to reinforce DACA after Trump sought to end protections for undocumented people brought into the country as children. The ninth is to dissolve the Trump administration's 1776 Commission of History Curriculum in Schools. The 10th is to cancel construction of the Keystone XL oil and gas pipeline. So the reason why this is going to be big for us, I mean, I'm going to highlight some of the other ones too, but this one in particular is because we're paying attention to oil reserves, and then also this kind of touches on oil being drilled, and then having pipelines going through federal and native lands, which this pipeline does. That was one of the big issues with it to begin with. So we'll definitely be keeping an eye on oil and natural gas because of this. With the canceling of the construction of this, we're now going to have to really figure out how we're going to get oil from Alaska and Canada into the US. And it would just have to be via another means. We'll figure out how as time goes on. All right, so the 11th is to extend the existing pause on federal student loan payments. This is a form of stimulus. Anytime you hear anything that remotely sounds like they're going to give people money or allow people to keep money in their pockets, that's a form of stimulus. It's stimulus without writing a check. So if you think about, you know, an average doctor graduating from med school might have a little over $1,000 in student loan repayments. The average student loan repayment is a little over $300 a month. So if you think about that, that's a bill or two or three outside of the student loan. So that's a form of stimulus. The 12th is extending the moratorium on evictions and foreclosures. Again, that's a form of stimulus. It's helping to keep money in pockets of people who can't pay their rent, so that the money can be reallocated, or just trying to help people to keep a roof over their head while they're figuring out their situation. The next one is to prevent workplaces from discriminating on the basis of sexual orientation or gender identity. The 14th is undo Trump's regulatory approval process. And the 15th is to extend deferrals of deportation and work authorizations for Liberians with a safe haven in the United States. So, you know, if you want to go back through and take time to actually see what it's like for a president to sign executive orders, if you want to get a visual without having to look at the picture, I just want you to look at the picture because it's just symbolic of everything that we talk about and cover fundamentally. But if you go to a restaurant and they have like those tri or quad fold menus and they're like super thick, think of like having 15 of those stacked up with a line of pins in front of you. Like that's kind of the visual of what all of that looks like. So definitely going to be unwrapping and looking at a lot of the pieces to these executive orders. Some of these executive orders are permanent. Some of them extend out through September, like the moratorium on evictions and foreclosures, the pause on student loan repayments. So that's going to be super important because we know that the current stimulus package that we have, parts of it has run out, other parts of it are still kind of ongoing, but money is slowly running out. So because we aren't out of the COVID crisis yet, my thoughts on the rest of the year are as follows, for those of you who heard what I had to say last January. So the rollout of the COVID vaccine, Biden wants to go really hard on trying to control the spread and also get vaccinations done. I suspect we're going to have a lot of government spending going towards not only protective items for healthcare professionals, but also manufacturing for masks and vaccination materials, whether it's the vials, the syringes, alcohol swabs, Band-Aids, like all that stuff to help vaccines get rolled out nationwide and to help everyone get them as soon as possible. That's also going to include the manufacturing of thermometers and probes, face shields. So making sure that we have all of those things. So I suspect that we're going to have a lot of government spending. So our um, producer purchasing index, so our PPI, is going to be, I suspect that our PPI, I'm gonna put it like that, is going to be going up over the next couple of months. The rollout and the date where we should have enough of the vaccine kind of corresponds with the very start of the travel season for the year. So that also coincides with oil. That also coincides with the transition of oil from a winter blend to a summer blend. That also corresponds with the higher usage of oil. So everyone's eager to travel, everyone's ready to get out. There are still some travel bans around the world for US citizens. So, just make sure if you're planning to travel, if you want to travel, that you know that country's going to let you in and know what the requirements are. But I suspect that oil is going to start creeping up once we hit like mid to late March, because April is when they're really wanting to start giving these vaccines out to the masses. And we know that Easter's around that time. Easter's the very first travel holiday of the year. So with that transition of the oil type, the transition of travel, and then also, people just being able to get out and about more, I feel like oil is going to start creeping up then. It's going to start creeping up even more so in May because of Memorial Day. And then with students really not being in school for the most part, for those who are, they'll be out of school. For those who aren't, they won't be tied to their computer having to do lessons. So families will be more willing to take vacations. Travel industry can try to start making that recovery this year. So I suspect that not the second quarter, but the third quarter earnings season for stocks is going to be one to pay attention to for the travel season. So for airlines, for Carnival Cruise, for Priceline, Expedia, a lot of the travel sites and stuff that you see, I'll be looking to see what their earnings are going to be like. And we'll be paying attention to what the COVID vaccine release is going to be looking like in April and May, because if people are still hesitant to get the vaccine and the vaccine is available and the numbers aren't matching, then we know that we'll probably have to go through the end of the year, as Dr. Fauci has predicted, with wearing masks and going through COVID precautions until we just reach a natural level of herd immunity without a vaccine, which will take a really long time. And if we do have to wait that long and people don't take the vaccine, I suspect that those same travel stocks and the industry itself in the third quarter will hurt because people didn't do the traveling that they thought in the second quarter. But if people travel like they did for Thanksgiving and Christmas and for the new year, then people are going to travel even more so when they get the vaccine or just this summer period, because people have already shown with the numbers that we've seen that they'll be rebellious. So hopefully people will be safe, but at the same time, people are going to do what they want to do. So I'll definitely be looking at that. I haven't really mentioned a whole lot about our interest rates and things like that as far as our dollar is concerned, because our Fed has said that they plan to keep our interest rates where they are, fairly stable for the next 2 to 3 years. So when they said 2 to 3 years at that time, it was through the end of 2021 or 2022, sorry, to 2023. So I'm not looking for anything like that to be changed. And the White House is getting back to normal for the most part. So now we have to start really looking towards and turning towards like what's going on in the world. We have to start looking back at world issues because we don't have any of the antics. We don't have any of the distractions anymore to pull us away from what's going on in the world. Um, if you saw the first press briefing earlier, it was reminiscent of what we saw like 5 years ago. Um, it was very mild, questions were asked, they were asked in the right order according to, how they've done things in that press room for years, for decades. So that lets me know that now we're really going to be looking at issues. So these executive orders that were signed today, they're going to be in the forefront for the next little bit. The first 100 days, so the next 100 days, is really going to be focused on the things that he put forth in this executive order. And it's also going to be focused on COVID, really trying to get COVID under control. So those are some of the main things that I'm looking forward to for the rest of the year. Right now, we don't have just any major issues with any countries. Um, we did kind of end the last administration with a little bit of rift with China because we were trying to ban apps. We were trying to still impart some tariffs. We do have tariffs on several countries right now. So I also want to see if if Biden is going to roll back Trump's tariffs on countries. Those countries are Spain, France, China, Canada, and I'm pretty sure I'm missing like three. But those are the big ones because some of those are our allies that we put tariffs on. We exchange a lot of materials with Canada. So that would be one of the first countries, especially since we have a new trade agreement with them, that I would foresee us taking a tariff off of. Um, and how are we going to know? How are we going to see that accounted for in our Forex data? I don't know if there's anything coming up, but I'll click through just really quick and see. Actually, I'll show you. It's not for the US, it's for another country, but it'll show up in the GDP. So we'll be able to see it in GDP data. I'll show you how you can go through and actually read all of that stuff in those reports. It'll show you what we bought, what we sold, what it costs to produce, what it costs to ship, and all that kind of stuff. It gives you all of that data. But going throughout this year, especially leaving the administration we left, I suspect that, from a media front, things will be a lot more calm, a lot more transparent than what they were. And that hopefully we can get back to what we considered to be a normal. There are some things that aren't going to go back. Corporations, for those of you who trade stocks, there are going to be a lot of corporations who are not going to go back to having people in the office. They're going to keep people teleworking because it's cheaper for them. So you'll see that reflected. You'll also see, continue to see numbers like Netflix. I'm just highlighting Netflix because their earnings just came out, but they have like 200 million subscribers. So everyone is on tech, everyone's on their computer, everyone is going through trying to find like, how can I make money without having to go back to a physical job? So someone a while back had asked me about stocks, had asked me, what are some Biden and recession 2021-esque like stocks and stuff. I have a list and you're just going to have to listen. If you missed one, listen to the recording again, because I'm not going to put it in the group. It's just a lot to type out. So Amazon, Shopify, Walmart, Costco. So those four, because they're e-commerce, you can go to their website, you can buy stocks on their web, or you can buy stuff. I didn't mean to say stocks. You can buy their stock because you can go buy stuff on their website. You shop. You don't have to actually leave your house to pick up things from those places. So e-commerce is going to be big still going into 2021. Travel and leisure, we talked about this a little bit. So one of the big things about travel and leisure, just because there's so much uncertainty in the market around those stocks, is just measure them and look at them the same way you will look at a Forex chart. And then on a down day. So when the stock is down, when it has a pullback in the stock, a good, nice pullback to try to get in, find an entry, is anywhere between 3 and 5%. If a stock pulls, especially if it's a nice, healthy stock, if it pulls back 3 to 5%, you're looking at like, okay, you should be telling yourself to at least get in on a fractional share, if not a whole share or several if you can. Just because a lot of stocks aren't going to be pulling back like that going forward. So for the travel and leisure, I did mention Carnival, Priceline, Expedia, but then also Boeing, because they make airplanes. They are the airplane manufacturer. Airbnb, because a lot of people are transitioning away from staying at hotels and are staying at Airbnbs. The hotel industry is still there, still thriving, because some people don't trust Airbnbs. So make sure you're looking at both. And then Uber, because most people, when they go on vacation, don't want to rent a car. They just want to be able to go from point A to point B and then back, or maybe walk. So Uber. Cybersecurity, because everyone is on their computer. Norton LifeLock, they are a securities company. CrowdStrike is another company. Palo Alto is one. Also going into 5G, moving forward with expanding 5G networks across the United States, not only for cell phone companies, but for just telecommunications across the board. Qualcomm, they're a chip provider. Texas Instruments, same thing. And then Skyworks. So those are companies who are going to be providing the hardware for these 5G networks. All right, so COVID stimulus. So these are companies that help to provide stimulus during a recession. So these companies that I'm getting ready to mention are not only good companies for 2021, they're good recession-esque proof companies, you could say, because people are always looking for the companies that do well in peak times and during recessions. So that would be companies like Walmart. I mentioned Walmart earlier, Target, Home Depot, Lowe's, Dollar General, and Dollar Tree. So Dollar General and Dollar Tree are there because obviously they're the low cost stores. So you can go in their stores and pretty much buy what you would be able to find in Walmart or, another store, but get it at a lower cost. For those who don't have jobs and for those who are trying to stretch their funds, those are stores you typically would go to try to, stretch your money. and really try to get the biggest bang for your buck. Dollar Tree is one of those companies also that doesn't really show you inflation because everything in there is always a dollar. So I used to work at Dollar Tree. Like that was my very first job in high school. Stuff in there was a dollar all the time. Now stuff is still a dollar in there. So when you're looking at a company who can weather inflation, who can weather economic storms, Dollar Tree and Dollar General are really going to be those two companies to look towards and at least have a fractional share, if not a whole share of their stock in your portfolio, just to have and watch it grow over time. All right, moving forward. So stocks to help us deal with China. These are going to be companies like 3M, Boeing, and pick one. Let's say any of the third party billing companies, but I'll say Visa. I was looking at three of them. I'll pick Visa. So if you click on Visa, it should show you other stocks similar to Visa, and you can look through them, figure out which one is the best for your portfolio, best for you. But these companies are going to be good because going forward, trying to build and better our relationship with China, trying to expand and allow corporations to grow into China. It's going to be nice to have infrastructure there for transactions, and Visa, along with all these other companies that you see on cards, um, help to facilitate those transactions through fees, and they get fees, and then we get that money here in the US. This kind of falls in line for everybody that's on this call: individual stock selection and wealth management. So companies that are trying to really help people on an individual level build wealth, these will be companies like Morgan Stanley, which is a big bank, and Robinhood. Um, when Robinhood goes public and gets settled in the marketplace, it'll be good to really look into Robinhood and follow Robinhood and its journey through just trying to help people get into the stock market. Robinhood is a good place if you want to go in and buy fractional shares, meaning you don't have to buy a whole share. You can put $20 in to a stock that costs $100 and you'll own like 20% of a share. So it still allows you to get into the marketplace and make money. So remote work, that was something we talked about earlier. Not only remote work, but remote school. So Zoom, Apple, HP. Think about companies that make computers and tablets and stuff. All those companies are going to be needed. Kids are going to need tablets. Parents and the workers at home are going to need computers. And then they're going to need a way to facilitate their meetings. We're having a Zoom call right now. So those are telework stocks. And for healthcare, because Biden is planning to roll back some of the things that Trump took out of what we call Obamacare. But he's planning to put a lot of those things back and then also help those who need help with healthcare costs and insurance to make sure they can get seen and taken care of. So for healthcare, one that I always have loved and adored is Johnson & Johnson. I love Johnson & Johnson because they're stable. They have a nice solid base. Johnson & Johnson kind of does a lot of things. They not only make pharmaceuticals, but they make lotions, healthcare items. They make protective items that we use in the hospital. They make surgical items that actually go into the body during surgery. They make instruments that surgeons use. I use during surgery to help patients, to cut people open, sew them back up. So when it comes to healthcare, Johnson and Johnson pretty much does everything. And they have a really nice dividend. And if you don't know what a dividend is when they have those earnings reports and quarterly meetings, they pay out a percentage based on how many shares you own. So Johnson and Johnson's great. CVS and United Health Group. So those are, you got an insurance company in there. You have CVS, which is one of the retail pharmaceutical distributors or pharmacies, and then Johnson and Johnson, which is a medical device company. So I'll give you guys those. I'll let you go through. You don't have to pick all of those. I just wanted to give you some so that you could have them, look through them, and just kind of have something to get you a Biden type portfolio. This is a really good time if you trade stocks or you're trying to get into trading stocks. The beginning of any presidential administration is a really good time to go through and either start or reassess your portfolio. I've had to go through and look at mine. Some of the other things that I did not put on that list that I wanted to mention just really, really quick are guns, because I've mentioned guns before. If you look at gun stocks now, they're sliding, and I'm like looking now to like get in and buy. I have been trying to find something, and I can't find it anywhere, and there's a waiting list for it. Also, I was looking across different news outlets last night, and there were people lined up outside of gun shops in 5 different states. And they were literally waiting for the gun stores to open so that they could go in. There are some stores that are closed now because they have no more stock. Ammo's gone, guns are gone, holsters, everything you could possibly think of to sell for a gun is gone, and wait lists are long for certain items now. That happens with the Democratic administration. That also happens with an administration where they've published like 3 pages of what they're going to do to restrict gun ownership in the United States. So everyone is trying to go through now and get it while they can, because who knows when in the first 100 days Trump is going to sign these orders on guns. And you have to go in and put in all this extra work to either get or maintain ownership of your firearm. So everyone's trying to get those things now. So anyway, there you go. For whoever asked me, there are your stock picks for a Biden portfolio. So I'm done. I'll let Mr. Levels go ahead and give you guys technicals. If you have any questions, or if you have anything you want me to share or cover on Friday's Zoom call, because it's just going to be a recap, let me know. Either put it in the chat here or drop it in the group chat on Telegram. Let me know so then I can actually plan to cover those things. If not, I'm just going to do a recap of the week, and that'll be it. And then Friday, I'll also go over next week. So if you want to really get a good look at what next week is going to be like as far as news is concerned, Friday's Zoom call is when I'm going to do that. So then I don't have to spend all of Monday going through news, and we can do more fundamental stuff so that I can get you guys rolling, so that every Zoom call doesn't have to be me laying the foundation. Like by the middle of February, like you guys should be good on fundamentals. From the basics side, I'm going to start building in a lot of other stuff, but I need you guys to get the fundamentals. So the fundamental portion for the basics of it is probably going to end around like mid-February. So ask all the questions, like, pick my brain all you can between now and then, because I'll start moving on mid-February. All right, so I'm gonna let you guys go ahead and hear from Mr. Levels now.
Cool beans. Good deal. Good deal. Good job, Corman, as always. Give me a second, y'all. Can y'all see my chart? Hmm. All right. Here we go. All right, cool beans. Let's jump right into it. So, as always, we know we start with the dollar. So, looking back from Monday, um, we got the retest of our price level here. Price sold off as expected. Um, I'm still waiting to see if we're gonna come back down and retest this price level here at the top of this yellow structure, or if we're gonna hold what price is currently at and keep pushing to the upside. Um, I do think we're gonna keep pushing to the upside. However, we could come down and retest this level and then continue to push up. So might just have to continue to be patient on that if price don't hold this level right here. But if price continue to push up and start to make new higher highs and new higher lows, then we can keep expecting the dollar to keep buying to the upside. Um, but if we break below this level, we'll come down. We should come down and retest this level. And if the dollar do continue to sell off to retest this level, then we know what that means for our currency pairs. Let's look at Euro USD from Monday. Tell you guys that I wanted to see it come back up into this structure price level here and give us a sell off of that level. We did achieve that sell for 80 pips. That's great. Now because we do see the dollar selling off, we see Euro USD starting to buy. That's cool. I want to see if we come back up and retest this sniper sell. and continue to sell off, or if we break that level, we break the sniper and keep pushing to the upside. So when I say sniper, I mean this engulfing candle right here. This is the sniper entry for the sell, the sniper sell entry off of the body of the candle that got engulfed. So the up candle, this blue up candle that got engulfed by this bearish selling candle. And look to sell off of the body, the opening, and the 50% of that candle. So that's why I had it marked like that. However, if price break it, and then we'll wait for price to retest it and then continue to push up to retest this price level here in this gray structure. So um so yeah, if you took that sell off of that structure from Monday, that was a cool 80 pip play. If you didn't catch the whole 80 pips, you could have still caught something off of it. GBP USD came up, sold off slightly. You probably got stopped out at break even, and then it just shot up, came back up and retested these highs, took out these highs, came back down and retested the bottom level of that structure. Now we see price continuing to buy. Um, we do see the dollar selling, so I'm not surprised that GBP USD is buying. I'm just surprised that it's like, well, the pound is more volatile than euro and NZD USD, so you get movement, you get volatile movements like that out of the pound. So in the pound, it will eat up your account. So be careful when trading the pound and yen pairs. Any JPY pairs, any pound pairs, they're very volatile. They will blow your account. Um, but yeah, so with GBP USD, I wouldn't be surprised if the dollar does hold price level that it's at now and starts to push back up to the upside, just to see GBP USD sell off of this sniper, get back below this structure, and then still give us the sell that we was looking for. So keep your eyes on GBP USD. If we do break back above this sniper sell right here, we'll just look for the retest and the continuation to the upside. NZD USD got a slight sale. Should have took some profit out of that. I got stopped out, break even. We got back above the structure. Gave a retest right here to buy off of. More than likely, NZD USD is gonna come back up here and retest this price level here. Around 0.7215. I'm sorry, 0.72715. Up in here. And then I would like to see NZD USD continue to sell off. Like I've been telling you guys, I'm waiting for NZD USD to come down here. I'm looking for a buy off of this price level. But until then, I'm just monitoring it. So moving on to silver. Silver gave us a good sale earlier in the week. Off the level. Couple opportunities, just sell here. Then we get above it today. Retest buying. So I want to see if we retest it and hold it and continue to buy to come back up here and retest these levels here. That's why I see silver going. So look for a buy opportunity off of this price structure right here, price level. For silver, check out gold. Yeah, gold. Still want to see gold sell off of this price level here at 1881. Might get up in there a little bit. I'm gonna delete this. I know where that look. Yeah, so see, we get this sell up in here. We'll see. If we break above it, we'll wait for the retest and wait for it to come back up here and retest 19.5. Yes, sir. Looking at Bitcoin, y'all know what time it is. Buy the dip. Oh yeah, I want to show y'all this with Ethereum though. Ethereum, I do want to see Ethereum come back down to about $800. So if y'all see Ethereum start to sell out, don't panic. Don't panic. Hold your Ethereum. Hold your Ethereum. Hold on, let me see something. Hold your Ethereum. Hold your Ethereum. Nah, they might not give me that. Let's do that one. Yeah. I like that better. So yeah. See, we come back down here. What's this? About 749, 780, almost 800. Yeah. So, but we gotta get back below here first before we can even start to consider that. But I think we can do it. I don't think Ethereum gonna run away from us like that, but they definitely got Ethereum going about 5,000 by the end of the year. So I would love to be able to catch it one more time down here about 700, just to load up on it one more good time. So I just wanted to put y'all up on that. Oh yeah, last but not least, my baby, U30. Going back to Monday night. Y'all see it. Price target hit. Now I'm waiting to see what we gonna do with this. Bless you. Now I'm waiting to see what we're gonna do with this high, this last high that was made January the 8th. What was that, last week? A week before last week. But yeah, Monday I told you guys I wanted to see price pull back down in here. We got it. Seeing price push up off of these price levels here. If I was to draw my structure like I'll be doing, you will see it like that. You see it came down in there perfect. Shot up 3,000 pips. If we measure the move, 3,000 pips. That's a monthly goal, a weekly goal, however you got your goals set. It's all your goals in one. So yeah, I want to see what price do with this price level, with this last high that we made January the 8th at 31,259. Price is appearing to still have a little bit of bullish momentum, but volume is starting to mellow out. Price is showing very overbought on a relative strength index. And so we're going to see if we get back below this structure right here, though. Let me go down to the 15-minute. Mike, I tell you what, just because they be thinking they slick. Hmm. Okay. Yeah. Yeah, we're gonna have to get below here, man. We're gonna have to get below here. Gonna have to be patient. We done got I mean, shit, man. I mean, this is how it is with trading. Once you catch 3,000 pips, I'm like, me personally, I'm done trading for the week, but I'm still be monitoring the market to be able to, send out alerts for you guys. Yeah, you just got to be patient now and wait for another setup. It wouldn't do any good to go chasing the market, especially when we don't had a 3,000 pip move for today. It would not be good to go chasing the market. So what I'm gonna do is be monitoring this low, because I need to see that low broken. Once I see that low broken, then we can wait for that retest. Y'all know the motto. Y'all know the motto. And then we'll see if we can write it down. So forth and so forth. So let's just see. Yeah. I'm gonna see. I'm in a sale on my demo account. That's how I be tracking price a lot. So I'm gonna see. So I got my stop loss up here on my demo account. So if my demo account gets stop loss, matter of fact, let me go ahead and set my alert. Set my alert about right here. There we go. Okay, we good. So yeah, that's what I got for U30. Ghost, you got anything you want to go over? If Ghost still in here. Ghost might have left. Cool. Let me unmute.
What's up? What's up, bro? What's up, y'all? How y'all doing?
What's good, bro? You got anything for us tonight?
Yeah, I'm basically piggybacking off what you said. The U30, I'll share my screen, but you gotta give me permission.
I got you.
I was basically I actually redid my chart over. I erased everything. But I was basically the same thing as far as U30. It's definitely running out of steam and momentum. You understand what I'm saying? But I will have to see it come up under this level right here for me to really put aggressive sell to the debt. I took a sell right here at the top. Actually about to get knocked out at broke even if it keeps pushing up. So I'm actually in a sell. I took it at the top based off of some snipers I had, but I went super light because we are in the uptrend and it might just keep pushing up. Mm-hmm. So I wouldn't advise nobody to take this sell right now. But just like you said, just piggybacking off of what you said, I'm waiting for it to break up under that level right here. Just being patient because that will push to the upside. You gave the trade out Monday. So if anybody took the trade Monday, nobody should be pressed to jump in the trade right now. If anybody rolled that trade up, that's a month worth of pips right there, to be honest, depending on the lot size. So I'm just gonna wait. If I get stopped out right here, I'm gonna wait. I'm anticipating that it may go down, but it may push up first to knock the early sellers out. And knock the early sellers out and the people that want to buy at the top, and to keep it pushing up to knock them out also, then shoot down. Or it may just continue to the top. But the only thing I could do is wait now. So I'm same thing with you. Only thing I've been looking at is U30, and I'm just being patient right now. I'm in a sell. I took the sell right here. If I get stopped out on a BE, I'll take it. I'm not giving it no room to give me a stop loss. I mean, to get a loss because we're in the uptrend. So I move the break even as soon as possible. So if I get stopped out, I'll just wait. I don't know if it's thing the rest of this week or is it going to be next week, because I'm not going to trade on Friday because I had a great week. So tomorrow will be my last day of trading for the week. So other than that, I don't have nothing. I'm just waiting, just being patient.
Cool beans. Appreciate you, brother. Now, anybody got any questions?